everyone and welcome to another Elliott Wave forecast charts of the day video. My name is Eric. Today is the 1st of February around 10:50 p.m. Eastern Times. And here we go guys with another charts of the day. Charts of the day is a session within Elliott Wave forecast in which every day we select an instrument among the 78 that we cover in the daily basis and we explain it in the shortest cycles and provide followers around the world our view in that particular instrument. Today, all you guys have to do in order to be able to see is visit Elliott Wave forecast, then you go scroll down a little bit right here, and then you're able to see the charts of the day. Yesterday was about Tesla, and today we're gonna talk about the S&P 500. The whole world is making a big deal. The whole world is making a big deal about the S&P. Everyone is guessing if the low is in place or if the S&P is gonna make another leg lower. Everyone, as always, is trying to guess what the outcome will be. As everybody knows, we in Elliott Wave forecast, we always be bullish the indices, and we always gonna be bullish the indices. The main reason behind it is because we understand human nature, and human nature always gonna be bullish. We found it no sense to be bearish the indices, but being bearish or bullish can depend. And when we talk that we always gonna be bullish, we're referring to the non-super cycle of the S&P. We understand as professional traders that there's gonna be pullbacks in between. That the one that happened in 2009, that the one that happened in 2020, that the one that happened in 2022. The market will not move in a straight line. Now, in 2020, when the COVID comes to place, we want the one that makes a public really extend to all the followers, thousands and thousands of followers around the world to buy the indices. This time around, we are a little bit careful with the indices, and we transmitted to our members to be careful with the indices. We have reasons to believe that the low is in, but we have reason to believe that a possible trap can be taking place, and that's what we're going to say. All right, so let's start first to see the S&P on the 4-hour chart. In the 4-hour chart, the S&P bottomed on October the 13th, and then it did a 5 weeks advance. It did a flat on the B wave right here, and the S&P is been advancing, right? It's 3 weeks from these lows, 1, 2, and 3. It's been advancing without separation. It's key in Elliott Wave that in a wave and an impulse there might be separation. What is separation? If you see the bottom of this wave 4, do not overlap the top of the wave 1. So that separation right there, we haven't seen it yet in the S&P in the 4-hour. Now, the separation needs to start from here, right? Because it can overlap the 1 and the 4, can overlap in the wave 1 as a leading diagonal, and also can overlap in the C wave of a flat that I'm going to explain later. So today, the S&P, as we were expecting, it reacted higher. In the next few sessions, yes, it should extend a little bit higher, but the next few sessions will be kept right here because the S&P it should remain above this level first. If they stand above this, the most that is stand above this peak of the wave 1 in red, the more separation it will create. And then the best case scenario for the bulls is that it create a secondary separation against these lows. Or either way, we're expecting higher S&P. But if we negate right here the separation, the Elliott Wave counts can get a little bit complex, and we need to be more creative in this cycle that is coming to the end soon from December 2020. So the shorter cycles we're expecting a little more upside, and hopefully a separation between this peak at 40.93 with this low that is gonna be created sometimes within the next few sessions. Regardless of the daily view in the S&P, and this is how we saw the S&P today before the Feds, right? This is our midday charts to members. This is how we saw the S&P today. The S&P in a very nice way retest the trend line and explode to the outside. And this is the real side. Retest the trend line and explode to the outside. So I'm going to give you something to you guys today, to the followers, no members of Elliott Wave Analysis. There is something that is not right 100% when it comes to the S&P. And if we look at the daily chart of the S&P right here, or the weekly chart, the S&P never reached our target that it was the moment that it took these lows after doing this rally. We were expecting 31.45 to take place. We are not perfect. The S&P never reached 35.45. That opened my, that we found the suspicious. Not that this cannot always, not that always needs to reach the 100% structure. That's not always the case that we reach the 100%. But when that doesn't happen, I always find that very suspicious. And I believe that the S&P from the lows of October the 13, 2022 is going to develop as we're showing there as an impulse. But there is something in Elliott Wave that is called the flag. And it might be the case that this is the case over here and that we are right here. This is June 2022. This is October, and the S&P can be doing a flat. As I say, let's not run before we work. And the S&P can be doing a flat, and the S&P, without a doubt, can drop still here. Anyway, the market won't go to nowhere in 2023. I doubted that we trade to new highs. It might get sideways, regardless, because after 5 comes 3, and after another 5 comes 3 in the most bullish scenario. But don't discount the flat. So, like I always say, from my experience of over 20 years doing this, my advice, get what the market is giving you. And what the market is giving you right now is more upside from October 2022. And then let the market decide if the low is in place or the S&P is going to do another leg lower and it's going to break this low. Nothing is out of the card. And probably you're hearing this from one of the person, the most bullish person when it comes to Elliott Wave service across the planet. Because we famous for being bullish the indices. At this stage, I'm looking at the indices with a little bit of let's be safe, let's be smart, and let's play what we call the Elliott Wave edging. Regardless, one of the two paths is gonna finish the 5 weights and it's gonna make 3 weights for that. Then we will have a better answer. So hopefully the S&P shorter cycles create separation and continue higher with this impulse from October of 2022. That's our view on the S&P. As today, if you like the video, either take this code to save 50% on the membership or take the 14 days trial, and then you can see this even more deeper analysis than what you guys seeing here today in our live sessions every single day. Thank you guys all. I hope you enjoy the rest of the day. Thank you guys.